The 5 mixing patterns in 10.4 cover the front door. Business expenses go into the wrong account on the way in. This video covers what happens after the fact. You paid a business expense out of pocket on your personal card because you forgot the business card, or the vendor didn't take the business card, or the subscription is still routed to the wrong place from sign-up day. Now you need to get reimbursed from the business without the IRS treating the reimbursement as taxable income. That is what an accountable plan does. The IRS definition is specific, and the 3 requirements are non-negotiable, but they're also genuinely easy to meet if you set them up once. An accountable plan is a reimbursement arrangement that meets 3 IRS conditions. When all 3 are met, employer reimbursements of employee business expenses, and that includes owner-employee reimbursements in an S-corp, are excluded from gross income, not reported as W-2 wages, not added to taxable income. They're treated as a return of money the employee already spent on behalf of the business, which is exactly what they are. 3 requirements, each one met through documentation rather than through any clever structuring. 1. Business connection. The expense must be incurred for the business, not for personal benefit. 2. Adequate substantiation. Receipts and a business purpose note kept on file. 3. Return of any excess reimbursement. If the business advances $500 for travel and the actual expenses were $350, the employee returns the $150 difference within a reasonable period. Most coaching reimbursements are after the fact rather than advanced, so the return of excess condition is usually met by default. The first 2 are where the work lives. For a sole proprietor or single-member LLC, accountable plan language is more a discipline frame than a payroll structure. The IRS treats the business as you, so there is no separate paycheck to exclude reimbursements from. What the discipline buys you is a clean audit trail when the personal card paid for something the business should have paid for. Document the business purpose at the moment of the expense, the email confirmation, the receipt, a single line of context. Book the expense in the right account. Move money from the business account back to the personal account to settle. The debit expense, credit owner's draw entry closes the loop, and the books read the way an S-corp election would read later. For an S-corp owner-employee, the formal plan is a real corporate document, and the compliance consequences of not having one are real. The corporation needs a written accountable plan on file in corporate records. With the plan in place, reimbursements under the plan are non-taxable to the employee and fully deductible to the corporation. Without the plan, or for reimbursements that don't meet the 3 requirements, the same money becomes taxable W-2 wages, subject to all payroll taxes, withholding, and reporting. The plan itself is a 1-page document the CPA or attorney drafts once. The compliance lives in following it. The conceptual reason reimbursements are not income is worth holding because it makes the rule feel less like a tax code curiosity. You paid a business expense out of pocket. The expense was the business's obligation, not yours. You were just the temporary funder because the business card wasn't available at that moment. The business pays you back for money that was never economically yours. The reimbursement makes you whole. It does not increase your net position. You're in the same financial place after the reimbursement that you would have been if the business had paid the vendor directly with its own card. That's why it isn't income. The practical threshold for when to bother with the formal structure is worth naming honestly, because not every coaching practice needs the full machinery. Sole prop earning $80,000 a year with 3 or 4 personal card business expenses a month under $50 each maintain the documentation and the bookkeeping entries, but don't force the formal accountable plan structure where it adds no value over the discipline. S-corp with monthly reimbursements across categories. Written plan in corporate records, IRS expects it, the audit defense pays for itself in a single IRS letter. Sole prop under $50 per expense fewer than twice a month. After the fact bookkeeping correction with receipt attached is acceptable. 3 documentation items per reimbursement, and the habit lives at the moment of the expense rather than at year-end reconstruction. 1. A receipt or a bank statement plus a business purpose note if the vendor doesn't issue receipts. 2. Business purpose in one sentence. Something like travel to Denver for ICF workshop, professional development. Date, who, what for, why business related. 3. The date of reimbursement entered in the log. Without these 3 items, the IRS can treat the reimbursement as additional compensation. With them, the reimbursement is excluded from gross income and the audit defense is built in advance. Open the accountable plan template in the resources right now, fill in your entity name and the date, and run 5 expenses through the log this week. That is your plan on file. Formal document for an S-corp, discipline reference for a sole prop. Then walk your last 5 personal card business expenses through the reimbursement log. Receipt attached. Business purpose in one sentence. Reimbursement date recorded. 20-minute exercise for the back catalog. Forward from here, the habit is documentation at the moment of the expense rather than reconstruction at year end. The reconstruction work is roughly 10 times the cost of the documentation discipline. Build the habit forward. Module 10 closes here. Revenue categorized. 1099K reconciled. Mixing patterns closed at the source. Draw and salary entered as the right type of bookkeeping entry. Reimbursements documented through the accountable plan. The books are clean. Every payment routes to the right bucket on the day it lands. Every refund reverses revenue rather than creating a phantom expense. Every personal card business expense moves through the accountable plan rather than getting stuck or recharacterized. Module 11 picks up the compensation thread from 10.5 at the strategic layer. How much to pay yourself, with the discipline the books in Module 10 now support.